Hello, my name is Alexandra Horwood. I'm an Associate Investment Advisor on the Horwood team at Richardson GMP. Listen in to the Alpha North Special Market Commentary delivered by Portfolio Manager Steve Palmer. Steve Palmer is the President and CEO of Alpha North Asset Management. He was named the #1 performing hedge fund manager in Canada by the Globe and Mail for 2010. Steve has a BA in economics from the University of Western Ontario, and he holds a CFA. Steve has 17 years of experience in the investment industry. In 2007, Steve and his partner Joey founded Alpha North Asset Management. Now I introduce to you Steve Palmer.
Thank you for taking the time today. At Alpha North, our investment philosophy is to maximize returns over the long term. How we do this is by investing in the asset class which offers the best returns over the long term, which is small cap equities. The small cap asset class is inherently volatile, so it can't be expected that every month will be positive. It's over the long term that superior equity returns are achievable. We put together this special commentary in early October, which outlines some of our thoughts on the big picture and macro view. Let's start with our macro view. It is important to note that we are not perpetually positive or negative on the equity market. Our view changes with the times. The chart of the TSX Composite on the first page of the special market commentary demonstrates this by outlining some of our major macro calls since the inception of Alpha North. You'll note that we have been particularly bullish since October 2011. Although we did not predict the severity of the decline in 2011, we did successfully identify the bottom in the summer of 2011, stating that the low for the current equity market downturn was set on August 9th of that year, coincident with a spike in the volatility index, which is a gauge of investor fear. At that time, we published a report which summarized the reasoning behind our bullish view. This report is archived on our website. We are correct in that the broader market has rebounded and trended significantly higher since that time. Now, despite the recent strength in large cap equities, Canadian small caps have lagged and have performed poorly. However, we believe the small caps have now turned, and we are now reiterating our bullish call. Our view is that the time to buy low is now. Investors who buy equity markets on weakness make significantly more money than those who wait for the comfort of the crowd. We view this as early days in the recent turn in momentum for the TSX Venture Index. TSX Venture is the benchmark we use for Canadian small cap equities. In our special market commentary, we take a look at this index. In my 25 years of investing in and watching small cap equities, I have noted that the venture indices rarely meander sideways for very long. Typically, you see strong momentum either straight up or straight down. At this time, we have experienced a decline of approximately 50% in the TSX Venture from the spring of 2011 to June 2012. Although the decline in 2008 was worse in magnitude, the recent decline has felt worse in many respects due to its longer duration. We believe that there are many similarities between the equity market conditions in the first quarter of 2009 and the current environment, particularly with respect to small cap equities. It is interesting to note that the TSX Venture bottom in 2008, the market traded sideways for 5 weeks near its low before breaking through its 50-day moving average to the upside. At that time, it proceeded to climb approximately 150% into the spring of 2011. A similar scenario has occurred in the summer of 2012, where the TSX Venture traded sideways for 6 weeks near its low before breaking through the 50-day moving average to the upside in August. To date, the TSX Venture has rallied more than 13% from the June low. We see that the momentum has clearly turned in favor of Canadian small cap equities. Historically, after periods of significant decline, the percentage gains can be quite dramatic. Macro fundamentals are also supportive for higher equity prices. The media has been spooking investors by highlighting all the negative economic news. But despite this, the TSX has increased 70% since the financial crisis low in 2008, while the S&P 500 index is up well over 100%. There are many positive factors. Fundamental valuation metrics are very attractive. For example, the price-to-earnings ratio, price-to-book value, and the price-to-sales ratios are all significantly below their long-term averages, and companies have a record high cash levels. This data is particularly significant in the context of the extremely low yields for fixed income investments. On the economic front, U.S. housing prices, which were the catalyst to the financial crisis in 2008, have been increasing. They're up over 11% year over year to September, and retail sales are strong. For example, auto sales are up 17% year over year. Employment data continues to improve as well. And China's growth story is not over. The Chinese government has lots of ammunition to support domestic growth. The urbanization trend in China will continue. In summary, we believe that the significant decline in Canadian small cap equities since the spring of 2011 has created a very attractive opportunity, an entry point. If history repeats, the TSX Venture Index could appreciate substantially in percentage terms from current levels over a relatively short period of time. Small caps have had a great performance after periods of significant decline like we experienced in 1998, 2001, and 2008. There is no reason to believe this time will be any different. Looking back on our strategy, we have outperformed, especially following periods of significant decline. We believe Canadian small cap equities are heading materially higher. Most investors will not take advantage of this opportunity of depressed equity prices as investor sentiment remains quite fearful. But we strongly believe the present time is a very timely one to invest in Canadian small cap equities. Thanks for taking the time to review our special market commentary.
Thank you for watching. Call me to chat about this special market commentary.